please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then Idea is a stock that's been bouncing around. Yesterday as well, it ended in the green, and today as well, the stock I think is up nearly around 6% as we speak. Rima, what's the news there?
Well, the DoT has given its approval for ATC to acquire the standalone towers of Idea Cellular. Now, this was in the works. All we were awaiting was the DoT approval for the same. DoT had given the approval for ATC to acquire Vodafone's standalone towers, and Idea was pending. So, Idea will sell its nearly 10,000 standalone towers, rake in close to about 4,000 crore rupees. Important because Idea is sitting on a huge debt of more than 50,000 crore rupees, and all the money that comes in on account of the tower sale can go into reducing the company's debt. So that is the news that the Department of Telecom has cleared the Idea ATC standalone tower deal, which gives Idea 4,000 crore rupees.
Okay, all right, Rima, thanks so much for that. So that explains why, in fact, the stock is up nearly around 6% odd. But how do you trade the Nifty? We've had a good couple of trading sessions, holding about the 10,560 odd mark. We have our technical experts with us, Ashwini Gujral, as well as Prakash Kaba. Ashwini, coming across to you first. What's the trade on the Nifty from here? If someone was holding a long position, would you advise them to lighten it? Where do you advise them to keep their stop loss at? And also, what's the fresh trade?
See, the market has held on very well. So possibly, long positions can be carried. 10,500 is your stop on the Nifty long position. And on the Bank Nifty, 26,950 thereabouts can be used as a stop. Now, what's interesting as of right now is that NIT Tech is moving towards new highs, while other tech stocks are coming off a little bit. So that way, I think NIT Tech could close towards the high point of the day. The other interesting stock is RIL. It did nothing yesterday, it did nothing today. It's almost near its 200-day moving average. So if this rally has to go further, I think next leg could be led by Reliance. So that's a buy with a stop of 910, target of 945. NIT Tech is a buy with a stop of 1100, target of 1160. And also Tata Elxsi is holding on to higher levels, and it's not giving off like TCS. So even here it's a buy with a stop of 1200, target of 1255.
Ashwini, what about oil and gas names like ONGC or GAIL? Now, for instance, GAIL, the numbers were quite disappointing, particularly at the operational front. Despite that, the stock is moving up. ONGC, after a big correction in the last few days, is showing you some green today. Any trading bets on these oil and gas stocks?
The situation is getting murky for public sector oil and gas. I would much rather be in a Reliance. And that way, you can play it much better. But OMC, etc., because it's a short covering rally and everywhere shorts are getting covered, you may have, 2-3 days of sharp moves. But I think they will finally go towards new lows. So in oil and gas, basically it's, Reliance.
Okay, all right. Let's go across to Prakash as well. Prakash, your take on the Nifty and your picks today?
Well, good afternoon. Looks like yes, Nifty so far it is up. Certainly holding 12,550, 10,550 seems to be strong. The target that I have, I think, is closer to around 10,600. Is going towards it. But what we have seen is a good short covering, and short covering being brought out here. It opened the gap up today and it's maintained the gap and it's holding on to the position. So I think when I look at the Bank Nifty, exactly similar is the case. I think Bank Nifty perhaps is climbing to around 26,200 to 250 zones. The way it's going up, seen a good up move, some kind of a pause, and a fresh up move should start in the later part of the trading session. I like two stocks. Go with Hindalco first. Looks good, and looks like Hindalco can climb to levels close to around 252 zones. Maybe a day or two for that, but looks like 252 guards. Stop below 240 should be fine. I also like MCX. That looks good. What a move that we have seen. Give some time and space. I think he's heading to levels closer to 850. It's a matter of time. Stop below 750 should be fine.
Okay, all right. Thanks so much, Ashwini, as well as Prakash, for joining in and giving us those trading ideas. We are doing well today. We've hit a half century, but let's see how the European markets they've opened up today. They've opened up with some green. So good news. Remember, yesterday, all the three frontliners, they ended with cuts. The auto space on the whole was under pressure there. We had the likes of Daimler, we had BW, all of them were under some pressure. That's on the back of an investigation that's been launched by the US Commerce Department. So some of these stocks, they got hit, not just in the European markets, but even in the Japanese as well as the Korean producers, automakers that is, they also are selling. Today, there's a bit of bounce back. The FTSE, CAC and DAX, they get some support. No worries coming in from there. Holding up with gains of around 0.4% to around 0.5%. Those are the initial rates, at least, that we
of steady gains up until now. So it's two back-to-back day of gains for our markets. The Nifty's rally close to about 50 points, while the Sensex has seen a gain of nearly 150 points. The optimism is really in the broader market. So the mid-cap index has extended its rally from the start of the trading session. So let's get the intraday chart of the mid-cap index up for you. Now higher by close to about 250 points. A couple of these Anand Ambani group stocks are moving higher. So Reliance Naval, Reliance Communication in the green as we speak, rallying close to about 3 to 4%. But Cummins, the domestic business disappointed for Cummins. There was a conference call which is currently underway. Anisha has heard that and she's here to tell us the key takeaways. Anisha?
Well, yes, Rima, good afternoon. Well, the domestic performance in FY18 itself was not very good. It just showed a growth of around 1%. Remember, the management guidance for FY18 domestic was a growth of 5 to 10%. They were not able to meet that guidance. Now for FY19, they say that the outlook is looking positive and hence they have guided for an 8 to 10% growth when it comes to the domestic business. So 300 basis point improvement if you look at the lower end of what they had guided for FY18. Now, as far as exports is concerned, a 30% growth is what they saw in Q4. However, they say they are watchful of what happens in exports because that has been really volatile for them. As of now, they say that it is going to be flat year on year. Remember, for FY18, we saw a decline as far as export is concerned. They also mentioned that given the higher crude price, that can augur well for their particular business. Other than that, if you talk about the sub-segments, they are expecting a growth around 9 to 10% as far as industrial segment is concerned. Their growth as far as the power gen business is concerned was around 7 to 8%. A word on the margins because they disappointed this quarter. They said that they were not able to pass on the price pressures that they were seeing on account of commodity, and going forward as well, they do not see a possibility given the high competitive intensity. So clearly, margins may not improve on account of the commodity pressures. Maybe a bit of a market share improvement might help them because they gained around 100 basis points this year as well. Back to you.
Okay, thanks so much, Anisha, for joining and giving us those details. But let's address those flashes that are up for you on the screen. We understand that, in fact, Oberoi Realty, they're looking to raise some money. Rima has all those exclusive details. Rima.
Yes, this is what we picked up from our sources, that Oberoi Realty is looking to tap the secondary markets, raise close to about 1,200 crore rupees. Now, they've been taking an enabling resolution to raise money of close to about 2,000 crore for the last 4 years now. But what is different this time is now they've mandated banks. So JM Financial as well as Morgan Stanley are on board to manage this QIP for Oberoi Realty, looking to raise about 1,200 crore rupees. That will entail a dilution of nearly 7% and bring down the promoter stake, which currently, as you told me, stands at close to about 72%. Now, for Oberoi Realty, raising money is not such a bad thing because this is one of the most conservative balance sheets. Their net debt to equity is just about 0.2, 0.3x as of FY18. In absolute terms, its debt is just about 1,600 crore rupees. So when a company like Oberoi Realty goes and raises money, it's just that perhaps they're prepping for some kind of a land buy or to fund their ongoing expansion. So unlike in the case of other real estate company, when Oberoi Realty goes ahead and raises money, it's largely for their growth purposes because debt, there is hardly any debt on the company's books. So 1,200 crores is what we pick up out of their overall provision of nearly 2,000 crore rupees. Okay,
all right. Keep an eye out for that piece of news then. But let's get straight to another CNBC TV18 exclusive now. We learn that Shalimar Paints is looking for an investor in the company. They've also launched a process for the same. Nisha Poda is breaking that story. She joins in with all those details. Nisha.
Oh yes, the stock has also spiked up after we really broke that story, and that is more because there is a kind of a confirmation coming in from the management. When we spoke to the management, they said that the company is not on the block, but they're definitely looking at a strategic investor to come into the company, while they think that they want to retain the present management of the company as well. What we heard from sources with direct knowledge, and after which we really reached out to Shalimar Paints promoters as well, is that they have hired EY to run a process and look for investors in the company. They are on the onset looking at about 15 to 20% of stake dilution so that there can be fund infusion into the company, and could be even looking at foreign investors coming in with their new technology for growth as well as upgradation of this particular company. But what a lot of sources also tell me is that some of the cement companies, as part of larger portfolio and bouquet of products that they want to offer to their customers, are looking for paints business, and Shalimar Paints could be of interest to them. And some of the private equity players who are interested in consumption growth story of the country could also be really looking at it. So at a time when other strategics could really want to come in, they may demand a control in the company as well, is what we gather from sources with direct knowledge. Of course, the company's market cap is a little over 300 odd crore rupees. The company hasn't managed to really perform very well in the recent past, so an investment will really rev up this particular company.
Okay, thank you very much for that. A 7% rally coming in on Shalimar Paints. Shreya Shipping is rallying post its numbers. 65% increase in the company's top line, margins improving to about 18 to 19%.
A couple of stocks should be up for you on the screen. IFCI, remember, we just had the management with us at the start of the show. They were telling us that the total gross NPA is at around 8,600 crores, and they're saying they're expecting to recover nearly around 2 to around 3,000 crores in this year itself. So that stock is up close to around 10%. You have United Spirits. We had some commentary coming in terms of their margin guidance. It could be mid-teens. That stock did see a bit of a dip, and now, in fact, again, it's moved to the high point of the day. And Kaveri Seeds, it's a seasonally weak quarter. That's quarter 4. Yesterday, the stock had a bit of a rally. Today, it opened up with a cut of around 4%. Now, it's moved into the green. So keep an eye out on that stock as well. But let's move on then. And as part of our special London Eye series, Udayan Mukherjee caught up with Robert Buckland of Citigroup as part of our special series. He began by asking him, why is he underweight on India when he's overweight emerging markets? Let's listen in.
The main issue that my EM strategy colleague Marcus Roskin would highlight, he's a bit of a value guy, and he always thinks that India just looks a little bit expensive. We've got an asset class that we want to buy because it trades on a relatively cheap multiple, 13.
Caught up with Robert Buckland of Citigroup as part of our special series. He began by asking him, why is he underweight on India when he's overweight emerging markets? Let's listen in.
The main issue that my EM strategy colleague Marcus Roskin would highlight, he's a bit of a value guy, and he always thinks that India just looks a little bit expensive. We've got an asset class that we want to buy because it trades on a relatively cheap multiple, 13, 14, 15 times, which is what emerging markets do. But I'm afraid India trades on 19 times earnings. So it's a bit more of a valuation call. We like India, we just think a lot of it's in the price.
Any thoughts on politics in India? Because we're heading to a big election cycle next year. Is that part of your
Not
judgment?
really, no. I mean, I think our call on India is very much yeah, as I said, good stock market, but it's in the price.
What is the US bond deal telling you now? Because that's become the focus of a lot of attention.
Yeah.
And some even go to the extent of saying that the next big risk for global markets is actually the US corporate bond market. Do you agree with that assessment?
Yeah, I mean, it's a big number. US Treasuries have just hit 3%.
Yeah.
I mean, I think we should take a little bit of a step back and think, well, if you told me that we'd all be worrying about US Treasuries hitting 3% 10 years ago when they were 7% or whatever. So let's take, I mean, 3% is a very, very low number. Let's not lose that perspective. But you're right. I mean, if you're a bond trader and you bought at 1.6, which is the low they got to, and they're now at 3, you've lost a lot of money. So I think in the bond trading world, yields going up to 3 is a big deal. Of course it is. But I think in the real world, 3% interest rates are still pretty low. So we think that, in the work that we've done, we think that equity markets can absorb bond yields up to about 3.5, 3.7 before they really start to come under pressure. So I think we're able to accommodate that, and it will cause disruption, bond yields rising as we're seeing at the moment. That's one of the factors behind the extra volatility that we're seeing. But I don't see it killing this, where are we, 9-year bull market. I don't see it doing that. So I think it's tricky for us to digest, but we will digest it.
Okay. What about the counter view that while everybody is stressing about bond yields going up and inflation coming back harder than people expect, actually it's growth which disappoints, and we get a growth scare which kills this bull market, not inflation. What probability would you assign to that?
I think that's a really good point. I would be much more worried if bond yields in the US went to 2.5, because we were worried about growth and we suddenly thought, wow, they're not going to tighten policy, they're going to keep policy really loose, than if bond yields went to 3.4. So I think that's a very good point. Equities in the end are more of an option on growth than they are on interest rates.
Now, what do you tell your clients who are sitting in the US and saying, what do we do with emerging markets right now? How difficult is it to convince somebody in the US today that he should leave the safe harbor of growth in his own country to actually look at something like emerging markets?
Yeah, I mean, that's a tough sell. The kind of the monster of this bull market has been the S&P, particularly to US-based investors. It's just kind of crushed every contrarian call that anyone has wanted to throw at it. One of the good things about last year is that EM kept up with the S&P, if anything, outperformed it a little bit. One of the things that helped there is that the dollar was weak last year, and there's a close relationship between the performance of emerging markets and the dollar. So weak dollar, good emerging markets. And I'm afraid one of the things that's changed this year is that the markets are now starting to think about a stronger dollar again. And so I'm afraid the S&P just carries on powering on, and EM are struggling now to keep up with it. The general pitch I use, and we are overweight EM, the general pitch I use to clients is that they look relatively cheap compared to the S&P, so trading on whatever 10–20% discount relative to the level of the S&P valuations in the S&P. So it's a value trade, but it does need the dollar to be weak to really work.
Do you have a call on the dollar? Do you believe that it might actually strengthen, putting pressure on EMs?
Yeah, our view on the dollar is that this current rally that you're seeing will peter out. There was a similar rally in September, October, when I was getting asked all the same sorts of questions about, dollar strength. Does that turn your strategy around? You're overweight EM. That's the wrong thing to do when the dollar is strong. At the moment, the dollar's rallying because people think that the US economy is outperforming the rest of the world, and therefore the US will tighten more than the rest of the world. That's kind of the reason why the dollar's rallying. However, we think that the twin deficits that are now being built up in the US, enormous unfunded tax cuts that need to be financed from overseas capital markets and so on, we think they will prove a drag on the dollar later in the year. So we think that the dollar strength that we're seeing at the moment will peter out. That should help EM to get back on their feet relative to say.
What suggests that the National Stock Exchange and the Multi-Commodity Exchange have entered into merger talks, and the entities are planning to approach the market regulator SEBI as early as this month to get an approval. Manisha now joins in to get us more color on that. Manisha, the stocks are moving up. Look at MCX now higher by nearly 8.5%. What does the merger mean for the two entities?
Well, what we understand as of now, and this is clearly very, very source-based. I mean, we still have to get clarity from both the exchanges, but MCX on what it has written to the exchanges says that they are, as a business entity, constantly evaluating their businesses, talking to other businesses, etc. But at this point in time, they have no disclosure to give and no request or decision that has come under board. So I think that's a clarification coming in from them. But clearly, the market or the street knows more, and that is the reason you have that stock running up at all times. One thing that what we understand really is that MCX is the market leader when it comes to commodities. NSE is the market leader when it comes to equities. While, of course, when you look at the market valuations of both of these, there is a huge difference there, because when it comes to commodities, it's only derivatives. And this market is not even open to financial institution, banks or FIs for that matter. But since SEBI has taken over, we have seen the market open quite a lot. And there have been various talks and rumors on what exchange actually could be tying up with what exchange ahead of the 1st October. That is when all exchanges would be allowed to trade in commodities. It is a big market. It has been around for a decade and more now, but it really hasn't been able to work up to its potential. And now, of course, you have bigger exchanges coming into the foray, and that could really open up the market further from here on. But what we also understand, and this again is source-based, that what NSE could be looking at when it sees MCX is that they would want their business and not their asset merger. So that is what we hear from the markets at this point in time. But Himanshu Gupta of Karvi as well now joins us. Himanshu, hi. Before we talk commodity strategies, what is your sense on the commodity industry as we see it, and how do you see it going forward in the next couple of quarters?
Well, good afternoon, Manisha. Well, clearly with the launch of new products like options and the mergers and the unified licenses at the members levels, I think it is going to be much more liquid and much more in-depth for the commodities market. And we are going to see much more bigger participation from the institutions as well. So I think from a retail trader, it is going to get a shift towards a matured market wherein the portfolios and banks and the mutual funds will all be looking to at least diversify their portfolios.
That point is well taken, of course. Whoever takes whoever, but the point is industry as a whole, traders, investors, etc., clearly would have a very good market to trade within. Himanshu, also talk about strategies then, and how are you looking at the crude oil prices now? We are down 2.5% from the kind of highs that we have seen for 2018 till time. Are you looking at further declines?
Well, of course, we have been seeing some kind of profit booking from the higher levels, and the prices were looking so much frothy few days back. And post the pickup seen in the inventory levels, negative news coming in from the OPEC that they might be looking to once again start the production levels at a higher level. So we have seen some profit booking at higher levels. But if I talk about the broader trend, the trend is still intact, and I think $69 holds well good support in the immediate short term. And already prices slipping nearly $3 from the highs. We think some buying can be seen from the lower levels. So from an immediate short term, we can expect some buying coming in from lower levels.
Okay, all right. Thanks so much, Himanshu, for joining in and giving us those details. And thanks so much, Manisha, as well, for filling us in with those details. By the way, we have Time Techno Plus. Those numbers look quite good. Remember, the stock is already corrected from around 220 odd all the way to around 130. Now, that stock has moved virtually to the high point of the day. There's a bit of a growth that we're seeing on the top line. The margins as well have expanded, and the net profit number as well is looking quite good, Rima, as we speak. And a couple of other stocks as well. United Spirits has moved up. IFCI was a company that Rima and me just spoke to. That stock as well is up nearly around 12% now. It's been a big underperformer. And United Breweries actually has come off the high point of the day, Rima.
All right, let's address then the flashes which were earlier on your screen, where Toyota and Suzuki have agreed to start discussing joint projects for technological development, vehicle production and market development. Remember, Toyota and Suzuki had already earlier announced a global tie-up. We're now joined by Mr. RC Bhargava of Maruti. Good afternoon, sir, and thanks so much for joining in. If you could throw any more color on what this tie-up will mean for India, what has been discussed so far, what should we expect in 2018 and 2019?
No, this development which you are reading about today is a follow-up of the MOU which was concluded between Toyota and Suzuki in February last year. And earlier also there was a press note which talked about certain aspects of development and sharing of vehicles and things. So this takes it forward. It adds, so the new item here, I think, which you're seeing for the first time is the technological support for a compact, ultra-high efficiency powertrain. I think that has come out for the first time as one of the specific developments which will take place. The production of models is actually something which was talked about even earlier. So this is not anything which I think is a new development. That was in the last press note also. And the third thing about the African market, I think also is a new development, that Toyota and Suzuki will jointly develop the African markets.
Okay. Mr. Bhargav, good afternoon. This is Sonia here. I just want to understand, is this different from the earlier MOU that Toyota and Suzuki had signed?
No. This is just, under the framework of that major MOU which they signed.
Okay.
These are the specific areas of development which are taking place. And as they reach some further agreement, I suppose in future something else may come.
Anything on the marketing and the distribution extension?
No.
Okay, so on the marketing side, there won't be anything?
Nothing.
All right. Any other details that you can share with us? Because I'm just going through the press release. It seems like there will be just technological support that Toyota will provide. And this was pretty much what was agreed to earlier, right?
That's right. That's right.
Okay.
So this is only more detailing of what was agreed earlier. It's not anything new which is happening.
Okay, so from a Maruti shareholders or investor standpoint, there's no new agreement that has been signed?
No, not at all.
Okay, all right.
Mr. Bhargav, if I may just ask one more question. You indicated that the new development is for the technological support for a compact, ultra-high efficiency powertrain, which is not there in your earlier, agreements or spoken about in your early agreements with Toyota. How soon should we expect a powertrain coming out from the Toyota Suzuki stable, and the scale of it?
We don't know yet how long this will take to develop.
Okay. All right. Okay, Mr. Bhargav, we'll leave it at that.
Okay.
Thank you very much for that. So it's more of the same with respect to the tie-up that Suzuki as well as Toyota had earlier announced in February of 2017. It's a follow-up of that. The only additional point, as Mr. Bhargav indicated, is that the two companies together will come out with a compact, ultra-high efficiency powertrain for which the technological support